Hello, Warriors. Dale Pinkert, aka Coach, and I consider it a compliment since it was my contemporaries that gave me the nickname Coach. I don't know if it's because of my age or because of my wisdom. Probably my age. Anyway, what really is a major feature today is the big breakdown and sell-off in U.S. dollar yen. Believe it's fueled by the missed payment or that Evergrande, which is, I was told by a trader friend of mine, much bigger than Lehman Brothers failure. Would have been Lehman and another broker combined, and that they're not going to be able to make their payments on September 20th. And so far, they're not being bailed out. So again, this is more of what I've been talking about for a while, that the world can't have it both ways, like in the Great Recession, that China was an engine of growth to lift us out of it, lift the world out of it. And it now seems to be the opposite polarity, that self-inflicted wounds, draconian measures, and they have an agenda, and tamp down on commodity prices, and definitely moving away from free markets when guys like Jack Ma are having issues in China. So glad to be in America, even though what's going on here isn't exactly a trip to Hollywood. But let's talk about this yen breakdown. So the range was really this 109.50 level. You know, maybe you could see it tighter here. You see this 109.50 level. And this rally too that we had basically was just a rollover rally. And I see the 200-day coming into play, which is under the 108 handle. And I'm thinking that perhaps we get something like this from down here, enough to shake out the bulls. Maybe we could take out this low. All right. So, you know, part of this is happening with risk off happening in the markets. And I'm going to get to that because we talked about the 2-week reversal in S&Ps last week. There were a couple entries that worked, selling rips. That's what's happening in the S&Ps, kind of a different mode of operation. Instead of buying the dips, now they're selling the rips. So we had a little pop today. We had a pop on the lower than expected CPI that failed, but let's stick with the yen because the yen has a lot to do with what's going to happen in the 10 years. So anyway, I'm looking for this. Could be a major buying opportunity in the yen, and then it should translate into some type of low in yields. I really don't believe we're going to make new lows all the way down here, but we'll see what happens to yields. Maybe we're going to get another leg lower in yields. You know, if I took equality from here, you know, it would give me in the 80s, which if I did some type of fib retracement of this whole move, probably would just be a normal correction. But right now, I wouldn't touch the short side of bonds. TLT I talked about as well. Not performing as well, especially if we could get through this 153 level. So this could be a major test in the bond market if the yen continues its move. Fairly high conviction that we're going to break down here in the end. And again, so here's my target. Let's look at the weekly, thinking right around this 107.5 level in the end. Then I'd look to buy it for another pretty big move to the upside, because I believe after this is over, yields will start to head up again, which will be constructive. But in the meantime, do the right thing today, and tomorrow takes care of itself. Negative action in yen. You're wrong back over 110. Sell any rip in the yen, looking for the 108 handle to be taken out and trade in the 107s. Euro action is, you know, kind of nondescript. We talked Monday about the possibility that, you know, we could have had a kind of a right shoulder here in the euro, and it seems to be developing it. I don't know if that involves one more trip down here to about 1790, or if we get through there, one more trip down here to form the shoulder. I'm going to be patient and wait for this line's going to end up underneath 1750. So this would be a magnet to me, where I'd be interested in trying the long side of euro, or on breakout back over 119.10. That's going to be important too. So still being patient with the dollar. Doesn't look great. Looks a little better than the yen, right? Yen looks much weaker. This is the daily. We already have a breakdown, this low being attacked, whereas in the dollar, whereas the low is way down here. Okay, so your preferred short, if you want to be long dollars right now, is short US dollar yen. What to do with the commodity currencies? They're an enigma to me right now. Longer term, when I look at the daily, tells me, you know, there is a shot for a third drive up here towards 31 if the dollar got going. Also could make a case that we could get some type of ABC down to 123 if we get that one more period of weakness and the Dixie ends up trading back down towards the 91 level. So still, you know, I would prefer to be short the yen. The weekly looks better. The daily looks more negative to me. Always sell the relative weakness and buy the relative strength, because even if your timing isn't perfect, it's going to be more forgiving than if you short the strength that keeps making new highs in your face. So I also want to talk about what's happening in the precious metals. Silver is acting better than gold, and gold got right to resistance here. So it's very possible that this might be it in the gold, that this is just going to be a little failing rally. And you guys know I've been looking for the 1750 level. You could sell a rip here and risk the high of this candle. You know, the high of the candle is 1808, and looking for these lows to be taken out, which could give you, 1750, 1740 gold. Gold looks to be the preferred short, as it's down $6 with silver up a penny. XAU looks like it wants the gold silver ratio, like there's another wave down, which is going to make gold the preferred short. Silver is the preferred long. So the gold short is a $10 risk from here, looking for 20 to 40. Oil, new highs. I don't know what to say about that. And let's get to the S&Ps. So the S&Ps are cracking the trend line and the moving average, or sitting right on it like Wile E. Coyote. Last week we were talking about reversal week happening in the S&Ps. You could see how the trading character has changed. Here was a rip that was one of the first failing rallies that we had. And so this was the first, and we had another one here. And every rally seems to be met with selling lately. So I'm not saying we can't get one more rip to 4,500, but I don't have to worry about it because I'm already there. But if it happens, I know what I'll do. Okay, because I believe this is just the beginning of what could turn out to be more than a garden variety correction. You guys know I was talking about some of the FANG stocks. Here's NASDAQ. NASDAQ holding up better than the S&Ps, but back under 15.3 is going to look pretty negative. I'm looking for these lows to be taken out as well. So we'll see. Again, just like in the S&Ps, could we rally back towards 15.5 again? Sure. We could have one more rally before the bigger break, or we could just go from here. I'm not Nostradamus. I'm Dale Pinkert. Nice to meet you. Looking at the VIX, it's not really, doing anything great, but it's not doing anything wrong. It's sitting up here. I think as long as where these moving averages are converging, we hold above it. I would not want to be short volatility. So let's get to some of the individual issues in some of the FANGs. And you guys know I've been monitoring Apple, and I think Apple has a worm in it. and just take it back to initially, we were talking about a 3-drive formation on the weekly. And last week, in a matter of 3 days, we went from testing the top of the rising wedge to this week, yesterday, almost a breakdown signal. My comment yesterday was to sell any strength, which we had early on the Dog and Pony show. That's also pasted in our main chat. Mike and I were on yesterday, and Mike, I've known Mike and his biases and what he's been doing in the markets for the last year. He's been long, and for the first time in a while, he's seen how there could be risk in the market. We talked about it yesterday. It's on our YouTube page. I say that you check that out and then come in and converse with Mike and talk about what he's looking for. To me, this is still pretty ugly action. You get short term. Could it bounce back to, here, 51 or so? Sure. And actually, this was not even a divergence, but look at how great it was here. Look at that glaring divergence from here to here. So 130 and change looks viable to me in Apple. Here's Tesla. This is really, pretty boring market. I guess as long as we're above, say 700, we're okay. Back under 700 looks lousy. Look, Amazon, this is pretty lousy action in Amazon. And not just because it's down today, but because of what it did last week. It tried to fill the gap. This was the earnings gap. Valiant effort, missed it by 30 bucks, and now we're rolling over again. That is not a good looking stock chart. If you're hoping for new highs in Amazon, I'm a very big believer in hope. In fact, hope is the oxygen in our lives, and hope is the carbon monoxide in our trading. So that's how I don't use it in your trading plan, that word hope, but it is something we all have to have in our lives. So how do you eliminate that hope? You eliminate it by knowing before you get in a trade where you're wrong. And that's where you put your hard stops. And you also need to know what you're looking for if you're right. So anyway, pretty negative action in Amazon. Let's take a look at Microsoft. Had a pretty good day yesterday, was part of the strength of the NASDAQ. Oh, it's blowing up again. And Microsoft better not stop going up, or there's going to be a problem in the NASDAQ 100. Something to pay attention to, though. And I think we almost made a new high. Here's the high in Microsoft. I think it was 305.65, 305.84, and today 305.30. So we're on the verge of making a new high in Microsoft, but check this out. Glaring divergence on the daily, shorter term time frames. Well, may still have it on the 4-hour at new highs. If we just make a marginal new high, we're not going to confirm, most likely on the 4. On the 2, we may. So even though Microsoft is on its way to new highs, it's not a great looking RSI structure, a lot of non-confirmations there. Google, kind of just gapping around. Looks like it's trying to round out a top. Netflix has been hot, but even though we have confirmed highs, almost looks like it left an island. I don't think I could buy this stock here and wrap it with Facebook selling off. Pretty classic looking round rising wedge here in Facebook. I think Zuckerberg might be on the verge of some of his net worth being under attack. So, to me, this looks like let's look at the weekly here. Okay. There it is. Just hugging some of the trend lines there. So That's the way Apple, that's the way Facebook looks. I wouldn't be long Facebook here either. Pretty ugly week. In fact, we have a 2-week reversal happening here. I think it could be short Facebook, and it wouldn't be unreasonable for it to come back to, say, the July highs of 303. So, I mean, that's a 70 point move. Options may even work there. And let's see what else I wanted to show you down this column. I think that's it. So really, the wrap is Dixie. I don't know. You know, I could make a case for maybe one more push up, but it's rolling over. Yen definitely looks lower. I think you could sell rallies up between like 65 and 80 and risk like 1080. You don't want to see it back above 1080. So I think you could risk these highs. It's actually 1036. So risk 100 for another 250. And the euro still looks like I'm going to be patient here with my dollar calls. And this is the first time I've seen the NASDAQ underperforming the S&Ps. Look at, we're down here. I'm not saying we're not going to rally, but it's the first time on my screen I've seen NASDAQ down like 40 points and S&Ps up. So it's been the opposite for a long time. So be careful. Everyone loves tech. Sometimes the bigger they are, the harder they fall. So that's a wrap, everyone. I want to invite everyone to come and hang out with us and become part of our community at tradegatehub.com. Just a quick encapsulation, patience in euro. I want to see what happens down here around 1750, see if the dollar could generate that kind of move. Cable looks like maybe we're going to get a third drive up towards 140. That is a possibility. I have some conviction here on the yen for lower levels. Gold is a short, stops above this high, 1808, especially if we make new lows back under this blue line at 1790. I think we could be looking for, always take partial profits too, guys. So, you know, if you end up being up 15, 20 bucks on the trade, you take half, you trail your stop to BE, right? And you ring the register and you still have something on if we continue down to these levels I've been looking for a while. Our mission here at TradeGate Hub is to build up and edify traders every day. It's not an easy thing to do. It's not for lazy people that won't put in the time or the work. You really do have to spend a lot of time, and you can't expect money to drop into your account. And you may want to consider education. We're doing that for free here, but I have an expression that you either pay to learn or you pay the market. And if you're going to pay the market, hope it's a community college tuition and not an Ivy League. And you can't learn experience. It will only happen with the passing of time and living through adversity. But here's the edge. You can learn from the experienced. So surround yourself with traders better than you and rise to their level. And that's a wrap for me. Don't just count your pips, count your blessings. Good hunting the rest of the day. This is Dale Pinkert signing off from www.tradegatehub.com. Adios.